Good day, Money Masters and Treasure Hunters. Welcome to the Thursday, October 4th edition of today's Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, sitting in for Tom this evening. He is going to be kicking off a great Tiger Real Estate Opportunity Fund event tonight, and so he is on his way to do that. And if you're not familiar with me, folks, I kick things off for TFNN every day, 9 o'clock, a show called The Trader's Edge. I give you the opening bell, the opening call, and you can always catch the archive of that show on Channel 9. Tom and I also own Tiger Metal Exchange, so if you're interested in either converting your jewelry to cash or buying or selling gold, silver, platinum, palladium, any kind of bullion, you can give us a call there at 866-618-8888. And I also have a outstanding newsletter service called Mastering Probability. That's out by 8 o'clock each morning. A very in-depth educational service out there. You can always check that out by clicking on my name on the homepage of TFNN.com. You can try that service out for 30 days. Folks, I absolutely treasure your presence here today, and my outcome is to help you to become a better money master. But mostly, folks, it is to provide you with tools so that you can lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool. I love this tool. It's called Connecting Through Integrity. Now, integrity, folks, it's honor. Integrity is honesty. Integrity is the glue that holds things together for us. Integrity says, I wish to pay a fair price for all value. Integrity says this. It says, pay for everything you receive, because getting something for nothing, folks, that makes it nothing. Getting something cheap, well, that just means that it's cheap. On the other hand, if you have to pay, it'll make something of you, and you will have integrity not to take advantage of others. Integrity has but 3 rules, folks. Write this down. Rule number 1, fight a good fight out there. You know, this is a market of bulls and bears, and they're having the good fight. We're certainly going to take a look at that. You had the Dow up 80 points. Rule number 2, finish the task. If you start something, you know, don't do it half-baked. Make sure that you follow through and you do it. And number 3, keep the faith. That means the markets are always going to test you. Life is going to test you. Just simply stick to it. If you want to connect with others, folks, do it with integrity, and the world will be yours. Our call-in number, 877-927-6648. Would love to hear from you. So let's go take a look at these markets, the integrity of these markets here. We had the Dow finish up 80 points out at 13,575. I do believe it's next stop, folks, and you can see the bullhorns on my head here, 14,144. We had the S&P close at 1461, I do believe, and I'll show you why. The S&P is on its way up to 1518, folks. The NDX 100 finishing out at 2828. It's next stop, 3010. The Russell 2000 closing out at 845, 844 and change, just rounding up for you. It's next stop somewhere around 880, maybe even 920 out there. And the New York Stock Exchange closing out at 83.76. It wants to get up to the 86.29. We had gold finish out at 17.92. That was up almost $13, 0.7%. Gold wants to head to the 18.38 mark. Silver up about, 35 cents, closing out at 35. How about that? 235s out there. Silver looks like it wants to make a run for the $40 mark. It's all going to need some more energy because the volume out there in the markets today was light. That's a part of QE3. That's the liquidity event that we have going on. If you are watching us on Tiger TV, we're switching over to my chart here right now. This is the S&P weekly chart. You know, those of you that watch my show every now and then, you know I put this up here. I want you to have a frame of reference as to where things are at. You know, the past doesn't equal the future unless you want it to. However, the past of quantitative easing, I do believe that the past does equal the future. That's what we're taking a look at here. If you take a look at QE1, that was November 25th, 2008. Now, the market did move down. It made a lower low out there all the way into the March lows. Those March lows are what I'm using to give you an A to B equals CD up on the S&P 500 to the levels we talked about. We'll take a look at that in a moment here. If you take a look at QE2, you know, I've heard some folks or some people have the belief that when Uncle Ben Bernanke came out with QE3, that we were off to the moon. All you had to do was fasten your seatbelts, and that was it. Well, that's not the case. That isn't the way that QE2 worked. QE2 announced the week of August 27th out there. The following week, what happened? The following week ended September 3rd. You had the market pull down and test that area. keep the faith, because the universe is always going to be testing you. It worked the same way here in the markets. How about Operation Twist out there? You know, that might be Operation QE 2.5 out there. But if you take a look at that, that was the week of September 21st out there. And what did if you take a look at the week, 2 weeks following, it took 2 more weeks before the market moved up out of Operation Twist area, just simply being tested and tested. Well, now let's go take a look at a spin at QE3. QE3 announced the week of September 13th. What happened the following week? Just a slightly higher high as we came into the end of September. If we take a look at last week, what did it do? It was testing where QE3 broke out of. This week here, you're closing right now. You're up at the top of the range. We are coming into Jobs Report Friday. That's tomorrow. And Jobs Report Friday, that has a history of being a pretty volatile day. I expect that we'll see the same out there. In fact, I would say 80%, 75, 80% of them have the have basically during the last, I guess, 11 of them. So over the last, let's say, over the last 12 months, 75% of the time, the Jobs Friday ends up being a down day out there. So we'll see. I expect that's what my expectation is, but that doesn't mean that I'm not a bull. I do see QE3 out here until we take out those lows. And what I mean by that is a close. Really, one, you've got to get a close below the week of September 21st. But now, because we had Super Mario Draghi out there, really, you've got to get a close below the September 7th week. That low out there in the S&P 500 is 1396.56 out there. That is on the S&P. I'll go ahead and just shorten up this chart here. The A to B equals CD coming off of the March 09 lows all the way up. That's your A point is back in March of 09. Your B point on this thing is the highs in May of 2010. That's when the S&P was trading out, got up to a high of 1219. It pulls back. It was really a slight pullback out there. The pullback into the week of July 2010. But just simply a one-to-one A to B equals CD, 1562. Out there. I said the next stop 1518. That's because I was looking at the daily chart here on the S&P 500. We take a look at the daily chart. What the S&P has done thus far, it's made a 1.272 butterfly pattern. It did that, folks, on the September 14th day, the day after the quantitative easing date. You know, the market has pulled back. You could expect that. We saw that happen in the other QEs out there, so you would have expected to see that also on this chart. That's what we've seen. Today, you close up at the top of its range out there. We're handing off the ball pretty good to Australia, pretty good over at the Nikkei. We'll see what they're going to do with it. Over in Europe here, you had the DAX was down 16 points, so really a relatively flat day out there. Let's switch over to the SPYs. We'll go take a look at the SPY here on the ETF. The SPYs today doing 113 million, going into 133. Now, when I say going into 133, I'm taking a look at really the downdraft from September 25th. The high out there was 146.24. It wasn't a swing point, but it did have volume of 133. Got up and over it. You closed back below it. Today you did that on lighter volume. Let me see if the volume here has been updated. 121 now. So we're up to 121 million shares versus 133. What the SPYs want to do is they want to go tag that high, that September 14th level. That's got 169 million shares. I do suspect that because of liquidity that is in the marketplace, we're going to see these areas taken out. And all that I'm doing on the SPYs, just simply going from the swing point high of April 2nd, 2012, that level 142.21, all the way down to the low that was put in June 4th, 2012. You'll see that the 146.31, that's a 1.272 expansion, folks. That is a butterfly pattern. The 1.618 level, that's where I suspect the SPYs want to head to, 151.53. On the IWM, it was light volume as well. We'll check that out. Maybe that's been updated, but basically 40 million or so going after 74. Ooh, that's weak. You had the diamonds, 3.8 million going after 5.2. No strength there either. To round it off, you had the Qs. The Qs did 22 million shares versus 41 million. 877-927-6648. Give us a call, folks. We'd love to hear from you. We'll certainly take a look at some of these stocks that were popping and dropping, leading the charge in the clubhouse today. Priceline.com up $12, but that's running into a huge supply line, folks. We'll be right back.